Good morning and welcome to today's key news update. Let's dive into the major stories shaping the markets and economy. First, let's look at today's stock market movements. The TSX Composite, Canada's benchmark index, opened the day with a major decline. This drop reflects ongoing investor caution amid global trade uncertainties. Losses in the energy and financial sectors weighed heavily on the index as concerns about slowing global growth and tariff impacts continue to ripple through the market. In the US, the S&P 500 also opened lower, marking its second straight day of losses. Declines in technology and consumer discretionary stocks drove this downturn. Investors are reacting to the latest developments in the US-China trade dispute, which has rattled market confidence. The Nasdaq, with its heavy tech focus, also saw a sharper fall. Major companies like Apple and Microsoft posted notable declines, highlighting the tech sector's vulnerability to global supply chain disruptions tied to tariffs. Next, let's turn to the escalating tariff war. China has ramped up its response to recent U.S. trade actions by announcing new tariffs on American goods, including agricultural products and machinery. This retaliation is intensifying pressure on global trade. It could raise costs for businesses and consumers worldwide, fueling fears of a prolonged conflict that might slow economic growth and disrupt supply chains across industries. Now shifting to the bond market, the 10-year U.S. Treasury yield has dropped to its lowest level in months. This decline signals a rush to safety as investors flee volatile stocks. For refinancing, this is significant. Lower yields mean cheaper borrowing costs, making it more appealing for homeowners and businesses to refinance loans or mortgages. This could lower monthly payments and free up cash, potentially boosting spending and investment amid economic uncertainty. Finally, in Canada, the 5-year bond yield has also fallen to a multi-month low. This drop is positive for the housing market. Lower yields typically translate to reduced fixed mortgage rates, making it more affordable for people to buy homes or refinance existing loans. This could spark increased activity in Canada's housing sector, offering a lift to the economy as it faces global trade challenges. That's all for today's key news. Stay tuned for more updates as these stories evolve.